Crude oil is rocketing higher right now. Is now the right time to get in as these trend reversals are starting? We're also going to talk about what the heck is going on with the big picture of the market. The Fed came out, cut by 50 basis points. Everybody was expecting us to rocket higher, and we're kind of stuck in the middle of nowhere. How do you trade right now while the market's in kind of this 3-week trading range? We're also going to talk about the biggest mistake that new traders are making, especially new traders. When you're trying to buy stocks, they're stalling, not going up, and looking for a different kind of trade. And finally, we're going to get into which sectors we're looking at. Let's get right into it. Why has the stock market not rallied since the big Fed announcement cutting by 50 basis points? We should be rocketing higher at this point. We had a big gap up and just kind of floating sideways. And it's kind of driving a lot of people crazy right now. We're not seeing those big, giant green candles everybody expected. John, what's your thoughts on this? Why is this happening right now?
Well, I think it was largely expected that we were going to get some sort of a cut. I think obviously the debate between 25 basis points and 50 basis points got people really excited. But once they came out with 50, I think it became a sell the news event where, hey, what's next? What a lot of new traders don't realize is that the stock market loves to look forward, 6 months, 9 months, 1 year. And if you don't have much going on, then you're not going to get much from the stock market. So I think a lot of that was kind of baked in. That's why we kept making all-time highs for the last several months. I think, what are we up to, 40?
Yeah, no, it's crazy. I think
for the whole year.
Yeah, I think during the pandemic, we hit 54 at one point that year, but that was because we got crushed and quantitative easing pushed it up. There's no quantitative easing right now. So this is a pretty amazing year.
Right. So, you have now an accommodative Fed, which the market was largely expecting. And now the market is basically asking what's next. And I think valuations are a little bit tight right now. I think, if you compare the valuations in the US to Europe and to Asia, the forward-looking PEs are much higher. And I think that the market is kind of stretched. And I think that could spell a little bit of concern for the upcoming earnings season, where you have it's going to become a show me kind of situation where you might get some nasty surprises if they don't just get right in line or have really good guidance and stuff like that, because the market is, in my opinion, looking forward to seeing what's going to happen next. We obviously have geopolitical we could talk about. We could talk about the election cycle. So you have two major uncertainty factors or unknown unknowns that I think are also hampering anybody willing to kind of hit the risk on button and go higher.
So before we get into the geopolitical conversation and obviously how that's affecting crude oil and the energy plays that are out there right now, I want to touch on the biggest mistake that people are likely making right now. And it's absolutely the most expensive mistake that I made 24 years ago when I first started, which was it's not going up, therefore it must be a short sell.
Yeah, that's a huge mistake. So when you look at something that's just basing and kind of going sideways, particularly with the volatility index being fairly elevated right now, I wouldn't say it's in freak out territory by any stretch of the imagination, but the VIX is fairly elevated. It's been making consistently higher lows for a little while now. And even though we backed off a little bit today, it's not kind of at its lows, and it's not drifting into complacency like it has in the past. So, that being said, you have this situation where you might get into the election, into the next maybe 4 to 5 weeks, let's call it. You might get, 1%, 2% swing here and there in either direction within a weekly basis. But when the smoke clears, it might all end up being right where we left off. And I think that seems to be like a likely outcome until, like I said, there's another catalyst going forward. There could be maybe a ceasefire geopolitically. That would be great. That might move markets higher. You might see, we did get some nice employment data that came out today. So if the soft landing actually lands, which it looks like it kind of is based on the data we saw today, with employment being 4.1%, that's a pretty solid number, plus a slight increase in wages that we saw as well. You look at those combinations along with inflation being under control, and you might have the soft landing might actually cause markets to go higher, but that hasn't happened yet. And again, valuations are going to be another thing. So I think the market is really trying to look forward to see, well, what else do we have to look forward to? And right now, the answer is not very much. So that's where that's kind of where we're at right now.
So,
From an option standpoint, it's great because there are certain strategies I could use to kind of pick a more range bound strategy, and those are some of the things I've been implementing, more of like a sideways strategy, where if the stock kind of stays where it is, I could hopefully make a little bit of money.
So I was going to say that from an options perspective, there's a lot more choices how you could put stuff together with the spread. From an equities perspective, boy, you really have to dial in on sector rotation right now because there's very short bursts of activity. If you traded tech stocks, for example, like we're on fire for the first 7 months of the year, you're stranded in nowheresville right now. So you really need a process for mapping out which ideas you're looking at right now. So, for example, we've been kind of rotating with interest rates getting cut. We've been in some real estate stocks that have had some nice moves recently. VNO is one that we initiated back over here. It's still kind of pausing. It's almost exactly the same kind of pause.
Yep.
So this is one good position that we actually have had on for a while. And utilities actually has been another area that just technically lines up really, really well. But we were on top of this because, and this is a question we got on a coaching call last night, how often do you do the scans? I do them every night. And then I review them again every morning because stuff changes. And especially in the market right now where the quote unquote big picture is not really moving, even though we're one push from all-time highs, you got to go a little bit deeper and see where institutions have their attention and piggyback them right now because we're not in a market that everything is going up. You got to actually be on top of your game right now a little bit.
Yeah, 100%, and it could be on a global basis too, like what we had with China last week. You have
some of those moves are unbelievable. Even the casinos exploded.
Yeah, you have institutional money trying to chase what the best situation is. So casinos and luxury items like like Estee Lauder, Ulta Beauty, some of those names kind of broke their long-term downtrend. You know what I mean? And names like Alibaba, obviously, Chinese names, FXI, I think was up 20% for September or something like that. So, yeah, I mean, I think what institutions are essentially doing is they're staying in equities, but what they're doing is they're moving their money around based on what they see in front of them. And I think that the technology trade looks largely kind of over. And they're looking to try to move money into other regions of the world, namely emerging markets. China, Brazil actually did pretty well last month as well. So you have a lot of stuff going on there. And as an equity trader, you have to be on top of the groups, home builders, real estate, and some of these other names. These are the subgroups are doing really well, and that's where some of the pockets of opportunity lie. But it does require a little bit of work, and it's not difficult. You just have to have a process in place where you're, doing your scans several times a week, like you mentioned.
So speaking of the geopolitical stuff, a big battle that we're having right now psychologically with members in our game plan. Every morning we have a pre-market game plan meeting, and I challenge members of the community to post their ideas from start to finish so that I can review them, so they start to develop the habit, kind of building that game plan muscle for risk, reward, probability, and how all that translates into what is the right allocation for this idea. The process we go through is build an argument. Give me as many reasons as you can why you like this idea, and then that will directly influence what you're going to start the position at. Big mistake that people make is they think every trade's the same, every trade's the same risk. But the reality is some trades are just simply better than others, but you need to learn to recognize that and then either put more or put less into an idea. Anyway, getting into the energy trades right now, this is where the problem has been, is people chasing some of these energy moves 4, 5, 6 days later. And I'm trying to tell them, yes, it's on fire right now, but we need to make a separation from trading order flow and especially stacked order flow, where we're looking for persistent moves where somebody is clearly building and accumulating a position and making a distinction that this is a news play. This is a pure 100% news play. And if you're going to play a news play, you better be ready to make fast decisions, which is different from that slow grinding trend when we have order flow.
Yeah, nobody could really predict unknown unknowns, obviously. And the geopolitical risk has been there for a little while. Obviously, we know what's going on with Israel and the Middle East, but we don't know what the outcome is going to be. We don't know what the what the end result as far as retaliation is going to be. We don't know when each nation or organization is going to retaliate. So you have to kind of look at it like there's too many unknowns for me to sit there and try to predict. All I could do is look for order flow, look for volume, look for a broken trend. Now, if you look at just XLE, it did break its long-term downtrend. So you can make the argument that, okay, it's getting exciting because it was in a downtrend since May. It looks like that was the high. Yeah. So you could see there it broke trend a little bit, but just because you break trend does not an uptrend make. And that's what I try to tell my community on the option side. Like it's something you should put on your radar. I think that you can look now. I think when you see a broken trend like that, I think you can look within the sector and start looking for outsized outperformers. Maybe people with maybe groups or stocks with more relative strength. One of the names that I had mentioned in the community was OKE. OKE was kind of missed the memo that XLE was in a downtrend. If you look at the stock, you can see, but you could see that it had that nasty move maybe a week ago, and that would have been a great entry point, right? That 50-day moving average, it looks like. Yeah. But that trade is largely kind of over right now. I wouldn't necessarily go piling into it right this second. I would wait for another pullback. But there are solid names within the group once you see it break trend that you could start to put on your radar. And that's where the analysis, that's where a little bit of work comes in.
Yeah, some longer term trends have definitely started to get cracked. But the problem that I'm seeing newer traders have that are just coming into the community and getting into the meetings now for the first time is they're not separating the next likely move at the moment they're ready to hit buy.
Right.
And the way that we kind of reverse engineer what is the optimal entry in our universe is if I'm about to hit buy right now, how much is left in the move that justifies the risk based on what the stock normally does? And it's a really elegant way of just coming up with risk reward that's realistic to that individual stock. It's like we're not guessing, like what does this stock normally do? What do I need to risk to put this trade on right now? And how much of that move is already used? And we can actually kind of use VLO here as an example. It's already moved a reasonable amount of what it normally does. So buying today after that giant candle yesterday sets up a low probability of follow through for the risk. So it's exciting, but it's a very short-term trade if you're putting it on it at all. But the next trade, this is kind of what you were saying before, we call it a tracking journal. Keep it in your list because after that first push, we want to see a pause, and that next pause validates a new entry point.
And that exists, and those are a lot of setups that I'm seeing in the energy space right now where, okay, the downtrend is broken. It looks like it's basing or it looks like it's pulling back. Let's try to find a reasonable entry point so the reward to risk profile for that particular trade makes sense. But just because if you start trading the news, which I know a lot of new traders love to do, their entry is going to be wrong 99% of the time. Because if you're hearing about the news on television, guess what? It's already priced in.
Late, exactly.
And trading, and then at that point, what you're doing is you're guessing that the news that you heard is going to have more follow through, and that you need justification for. You can't sit there and say, "Oh, just because I think it might happen, or I think this momentum and energy might continue to follow through." You need validation for that. And right now, that's not the case. The trend is broken. It kind of is on my radar now, but we need some things to happen in order for that to work. And that's what that's the whole point of going through the whole process.
Very similar to earnings. A lot of people like to trade into earnings because of the volatility. I know there's some different option strategies used prior to earnings, but I don't teach or trade heading into the earnings. I wait for the earnings to come out, and then I wait to see if there's follow-up buying or selling, and then I take the easy trade and I hop on board after the fact.
The easy trade is to trade after the news comes out, because then you could check the momentum, you could check the volume, and you could pick a better direction with a higher probability. You could check the short float, see if there's a short squeeze. There's all kinds of things you can check after the news comes out. Mm-hmm. And to see the price action in real time, you can make a directional decision. But to guess beforehand anything, whether it's geopolitical, whether it's earnings, whether it's an unknown of any kind, it is really challenging. I don't think it's really going to help you over the long term, especially with earnings. Now that we're going into earnings the next couple of weeks, you have to keep in mind, it's not just a coin flip. And this is what I tell our community all the time. It's the coin flip of, hey, are the earnings good, or hey, are the earnings bad? But then it's another coin flip. It's, what's the reaction going to be? And then, okay, what's the guidance going to be?
Yeah,
and
that's the big thing that we teach. We teach what was expected, what came out, and then what did they say about guidance? And then if they talked about guidance, did they talk about the next quarter or the next year? Because there's a deeper conviction in saying, here's what we're going to do for the next year versus what we think we're going to do for the next 90 days.
So if there's 3 to 4 potential outcomes, let's call it, right? Whether, okay, earnings, the actual announcement, then you have guidance, then you have, maybe even an analyst upgrade or downgrade. And then, you have all these outcomes, and each one is a 50-50 outcome. So your probability is no longer 50% of success. It's more like under 25%. It's more like in the teens. You have to guess every single outcome correctly. And that's just difficult to do.
Yeah, as veteran traders, we're saying that because we've seen it before. When I first started trading at my first prop firm in New York back in 2000, I would see people make 10 grand in a day in a heartbeat, and then make a dumb trade after hours trying to guess earnings and give it all back in 40 seconds.
Yeah, because all it is essentially a gamble. Yeah. Because you don't know, it's an unknown. You have no way of predicting it. And if you have no high probability situation to predict it, then you're essentially just gambling. You're essentially just guessing.
Yeah. So we've been mostly on the utility side. There've been obviously some technology stocks that have carried through. AMD caught a little bit of a bid recently, but they're not on fire. And this is actually kind of a different type of conversation with the type of market that we're in right now. And I don't know if this is done with the volatility bent to it on the option side. John, maybe you can elaborate a little bit, but I teach our people to determine what is the expectation for follow through based on, we have a whole sequence that we walk through, from the market to the sector to the group to the stock, right? And that sets our expectation for the kind of profit targets that we're going after. And then we break that down a little bit more into, are we trading the trend or are we trading the momentum? And the way the market's trading right now, we have kind of shifted more so into quicker profits and not necessarily looking to build a position. We got the election in a month. I mean, who's going to be putting huge money down on anything right now from an institutional perspective with the election 3 weeks away and a total toss-up at this point?
Yeah, I think institutions want to wait for the smoke to settle before they could start reshuffling their portfolios. And when they reshuffle, they'll reshuffle and you'll see some sector rotation occur. But you're not going to see action like that until after the election. Going into year end, it will probably be most likely rotational, like maybe late November, December. Usually in some years, rotation occurs like year end kind of stuff where portfolios are reshuffling. That usually happens a little earlier, like even October, November. But now because of the election, I think that's going to get pushed into December. So you'll probably see a fairly active December when normally December could be fairly subdued, or you get a Santa Claus rally into some of the more popular names. But I think we'll get a little bit of a shift otherwise. But, we got to see what's going to happen. I think that, there is opportunity out there, but doing the homework is really important. And on the option side, I think that picking the right strategies is extremely important right now. And just like you said, like taking profits fast and not building a position because things are going kind of sideways to up, and you don't really know what kind of day you're going to get. Options, you have to kind of treat the same way. You have to say to yourself, okay, well, I don't plan on sitting in this particular name for that long because I'm getting time decay against me, right? As an option trader, you can't really sit in things very long if you're a call buyer or a put buyer. So what you have to do is put together spread trades. You have to put together things where that they're time positive or theta positive. And those are the types of trades that we teach our community, especially in times like this, where you might have to sit in something in order to potentially get a profit.
So we spent some time here talking about doing the game planning or researching or scanning. I think what we'll do, John, is we will put a link. You just recently did a video that's getting some pretty good comments and follow through, and people are loving it. What we'll do is we'll put a link below this video in the description of the video that John did using FinViz trading software to do the scans, and it'll be a really good, solid foundation for everybody to learn how to do that. So we'll kind of leave it on that right now, John. We'll give people a little bit of time to get into the scans in the next video. They can leave some comments below, and any questions they have on either today or that, we'll get back to them in a future video.
Yeah, absolutely. That video is pretty good because I mean, there's so many filtering choices to make, but really, I mean, you know this, Pete. We only probably do 5 or 6 of them. We don't. There's probably hundreds of choices in filtering you can do, but there are certain ones for certain specific reasons, and that video does a pretty good job of explaining that. So either whether you're into stocks or options, it's more or less the same filter, more or less. So it's very helpful.
Okay, great. We'll put that in the description. If anybody has any questions about that, also leave a comment. We'd love to hear from you. We'll get back to you. We'll make another video on it, quite honestly.
Absolutely.
All right, everybody. John, thank you so much. Have
My
an
pleasure.
awesome day, and we'll speak to you soon.
All right, take care, Pete. Good talking to you.
Bye-bye.